Hi trader, welcome to the live webinar with Admiral Markets. My name is Chris. Thanks for joining us today. We're going to take a look at strategy webinar, and the topic is candlestick and Fibonacci patterns at support and resistance. So I promised 2 weeks ago to take a look at breakouts. It slipped my mind last week, but this time I remembered. So we'll be specifically, sorry, tough word, looking at that. First though, be aware that this webinar is shown to a global audience. May not be suitable for everyone though. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, before we kick off looking at the charts, it's always good to be aware of what's going on in the market, what kind of news releases and data could we expect. Housing starts, building permits, big surplus, more than they actually forecasted. Housing starts too, so definitely the housing market is seemingly rebounding. Yeah, but what impact it has on the broader economy, I think, is still a question mark. We had some other news coming up tomorrow, which is euro interest rate, and we might have a Bank of Japan policy statement. By the way, we have Aussie unemployment rate tomorrow, and we have pound retail sales. So, especially of course, the interest rate on the euro is important. So let's dive into the market. We can take a quick look at some other info that is sometimes good to look at. For instance, when you look at analytics, you can take a look at the market heat map. Of course, our analysis, articles, market sentiment. If we look at this market heat map, you get a quick overview, what's going on, what is moving fast, what's not moving at all. Here you can see cryptocurrencies, pretty solid gains here so far, all kind of dominating, in fact, the movement so far. When looking at the Forex market, we can see basically pound odd, wow, what a drop, what a volatility, pound New Zealand 2, odd USD upside, odd New Zealand, odd CAD perhaps, yes. So Aussie, pound, big movers. Some pairs that don't move that much, right? Like surprisingly the euro yen, which is typically a big mover. Gives us some idea about what we can expect. From a currency range perspective, volatility did drop considering, compared to the day before. And you can see that pound was a big mover as always. Aussie, surprisingly second. Aussie has been moving maybe because of the news events this week. So it gives you some more idea, just to give you a quick introduction for that. And last but not least, and then we really look at the charts. I don't want to look at these tools too much, but just wanted to share that with you. If you haven't already done that, perhaps a good way to start. I don't know if anyone is new in here with trading. Is this your first webinar or second webinar? Are you looking at the markets just recently? Then it might be good to take a look at this Forex 101. 9 online lessons, and it's free of charge. So that's worth it. Perhaps you can take a look at that. You can find that by going to Education 101. If you are finished with that, or you think that you're more advanced, you can also think about Zero to Hero. It never hurts to go through the course anyhow, even if you think it might be, it might be too simple for you. It's still worth it to take a look at both. All right, so that's that. Let's take a look at the charts now. So what has happened since yesterday? Well, as we were discussing yesterday, the euro dollar is probably going to make a retracement. So anyone who joined knew that I was looking for bullish continuation of your dollar. The trend, in my view, is bullish, and I'm expecting a retracement, bearish retracement, and upside continuation. So the first half has been completed. Yes, we have the bearish retracement. Will we get the bullish continuation? I don't know. No one knows, right? That's part of the psychology, and we have to trade the roadmap as best as we can, but sometimes that roadmap changes. So far, I don't think there is any change, and I think that there is a good chance of a bounce. However, there is an interest rate decision tomorrow. That's still quite far from now, but could your dollar go sideways to that event? Yes. So technically speaking, I think it's perfectly at a spot where it should bounce. Will it bounce? It might not because of that interest rate. It is possible. Those kind of news events do tend to slam down volatility a bit before it, increase it when the news event happens, and that's just a fact of trading. So I did take the trade, but if price is still going nowhere 1-2 hours or so and 1-2 hours before that event, it's bouncing around, showing no movement. Yes, then I will exit the trade. I will take whatever loss at that moment that it is, and just reduce the loss, or maybe take a small profit, if depending on where the price is. If price has gone my way, I might keep it. I don't have to necessarily close it, I think, but it does depend on how far price has moved. Are there any support or resistance support levels? Sorry, I can use for trail stopping the trade. So I have to see what my options are. But just for your information, basically, we were looking at the chart yesterday here, and we said that price had reached the minus 272 target, and that was therefore a likely retracement level, a likely bouncing spot. So indeed, that was the turning spot. Price made continuous lower lows with candles going back to the 38.50 fib area that I was talking about, which was based on, if I remember correctly, this fib. So I was looking for a confirmation of a bounce, which happened here on this candle. I took the trade there. We've had some struggle. You see bearish candles, a lot of wicks. So from that perspective, maybe it could have been wise to exit, which I didn't. I'm holding on, but that might be, might turn out to be. It doesn't. Yeah, you're basically the trade has gone further so far. So I'm the trade is out of control in a way. Not out of control, but I mean has gone past my entry spot. So I am waiting and seeing. There's nothing else I can do. I could still exit now. I don't think that makes much sense because price did bounce to 50 fib. So basically, I took the 38.2 fib. I put the stop loss below 115, and let's see how this goes. All right, it's basically trading my roadmap because when I look at the 4-hour chart, what I see is a breakout, and I think this is a pullback for upside. Also, if you look at the daily chart, I think that this is a good daily candle breakout above Keltner and above the 115. And I think that this is just an inside candle. The stop loss might be a bit risky, putting it just below 115. Safer stop loss would be below yesterday's low, below 114.70. So a bit risky maybe for myself, but I went for a smaller stop loss on purpose. So good daily breakout, and I think that this is a bounce. I took the pound yen too. I think that too could be a 50 fib bounce. Yesterday I was talking about the fact that it's important to be patient, I think, with bounces, because as price hits this 50 fib, it will not move away from that zone too fast. I said that there could be some impulse, a hook back, and there could be a continuation. Wait for the hook back. So you can see now why I was talking about that. Yesterday, we looked at many pairs, and many of these pairs were not in a good spot from a time perspective to trade. And now you can see how important that is, that time is on our side. There's never ever a rush in the Forex market. Yes, it might seem like there's a rush. It might seem like we have to make a quick decision, but that's just a false kind of narrative in our mind, because we might not be analyzing it with kind of the confidence yet that takes time, it takes experience, and there's nothing wrong with that. Just keep in mind that hardly ever is there something that really is a now or never moment. Sure, there are always some moments where there's a breakout and that's it. Price is gone, that's it. Yes, those do exist. But here, based on my experience, I said yesterday, with the euro dollar, with the pound dollar. Wait, take it easy, let it confirm, let it show, and that's what it did. Impulse, correction, and bounce? I don't know. A bit, right? Just a tad. Small bounce. Not enough, though, to say that this is going our way. Because actually, I also want to have one critical note about this formation is that if it stays too long in this formation, it's a triangle. That's not good. Because in that case, oh, sorry, wrong button. In that case, again, wrong button. Okay, that's the better button. Okay, so that could be downside momentum, correction, downside momentum. That's not good. So I would like to see a break soon because if this is a triangle, then that could be A, B, C, D. This could be E. So break should happen now. If it bounces down again, I would consider, thinking about maybe taking this trade off, perhaps. So that's something to be aware of, right? That although time is on our side, it's not something that is our ally forever either. So you can check out YouTube and look at Admiral Markets YouTube channel, search for trade management, and I talk about the various stages when I use loose, tight trade management, which I think is the best harmony for tackling such decisions. If anything, by any chance, what I say is, you're not sure about that or you don't understand it 100%, please let me know through the chat and I can elaborate. The pound dollar trade is based on larger analysis we discussed yesterday. The fact that I think that there is a chance of a 130 bounce at 130, the round level, the 50 fib, the bigger uptrend, the bigger breakout, and I was looking for a hook back here, and let's see, I was looking at this pullback right here. That's where I took it. Now, I think one could have taken it earlier on this candle, or even on this candle, because I think that this was already a good candle that was kind of confirming the bounce. This was, in a way, a breakout candle already, and this was, in a way, the second hook back. So a couple of options, I think, that all have their own relevance in a way. From a 4-hour world, this is engulfing twins, I think, or anyhow, it's a good bullish candlestick pattern. And so that could have been entry, or retracement of that candle could have been entry. So we got a couple of options. I think it makes sense. 1, 2, 3, 4, 5, sixth candle as well. Not breaking this low, another potential entry. But no guarantee that the trade is going our way. Nothing at all. Just some entry options. And although I'm patient, let's see, has to be, coming quickly, I would say. I would like to see it move definitely a bit our way. I would probably be patient till I wake up tomorrow. And I wake up at around 3 a.m. GMT time, by the way. So that you have some context about that. So then I'm going to review it again. I'm flipping through a few of these charts we talked about yesterday, not because it's necessarily connected to the strategy webinar, so please have patience with that, but because we talked about it and I like to kind of connect what we discussed beforehand and then review how things happened afterwards. We can take a look at the dollar yen too, and we talked about that here, and I was saying that this also is a bouncing spot with the minus 61.8 target, and that's one, and then we want to see how price responds to that. Is it going to be an impulse? Then it could be a bigger correction upwards, or is it going to be some kind of flat correction like that? Anyone trading basically the dollar yen earlier this morning or later Asia session could have seen that this was pretty corrective. Not maybe necessarily the beginning, but definitely when it went flat like this. So now entries here, I think this candle could have been an option right here. This one could have been a decent one. From a 4-hour perspective, that same candle with the wick, not a bad one, I think. Those are a couple of options right there. Trade hasn't gone all too far yet. Moving into break even probably would make sense. Aiming for 111.25 could be good. 111. 111 indeed. So yeah, that's just the majors. We talked about more, but I don't want to dive into all of them. That would be too boring. Just give us context about a few of them. Let's move on though now. We can take a look at gold still. That's fine. We can use actually the strategy I wanted to discuss some of these elements and do that on gold. And I'm doing fine, by the way, Angel. Thanks for asking. Really great weather today. So after this webinar, I'm going to probably go for a walk, get some fresh air, and step away from the PCs for an hour or two. And hope you have that opportunity too. Let's see. We can take a look at gold now, right here. All right. Let's start with daily. All right. So bounce definitely in full swing and full motion. We've had this is one of those pretty aggressive upsides that 5 to 6 candles, 1, 2, 3, 4, 5, all the way up here. So sometimes time patterns. By the way, just as a side note, by the way, this is not has nothing to do with the strategy. Just analyzing it. Sometimes if you wait for 5 to 6 candles, boy, price have moved already quite far away from it. So from that perspective, sometimes it's good to wait for retracement if that occurs. But anyhow, that's a side note. Regarding breakouts, because we were talking about 2 weeks ago about trading bounces at Admiral Keltner indicator, which is part of the MetaTrader 4 Supreme Edition, which obviously you can find on admiralmarkets.com. And talking about breakouts, so basically it's a pretty straightforward decision zone when looking at candlestick formations. You have to wait for price to get to the top or the bottom part of the Keltner. So now we don't have that on the daily chart. We did have a couple of examples. Let's see. Here is one, and here, and here. Let's see. Here, and here. I don't count this personally. So those are a couple of them. Now, why do I not count this one? Because of the fact that this is still one swing, and we had recently a breakthrough it. So from that perspective, also we should note that the euro-dollar break of the Keltner is not as strong as well, by the way, because yes, we've had already a few breaks before it. So and this is one swing, so that's something to note as well, by the way. Going back to gold though, if I can find it. So this is not particularly any setup on this daily chart. Take a look at the weekly chart. No. Yes, 4-hour chart has one. So it's pretty quick. You can analyze it pretty fast. You can look at many charts in a pretty sufficient speed like that. And the breakout candle should have a candle close near the high for upside or candle close near the low for downside. And looking for basically strength as price makes a breakout. So in this case, you can see a good breakout candle, a candle size that is also, the candle size itself, the candle structure is pretty, well, let me put it in simple terms here. The high and the low, 14, so that's a good size candle, especially if you can compare it to the other ones. That helps. That's an extra bonus if that particular size candle appears. So one of the entries could be just at the candle close. Another option could be to wait for a retracement to the 38.2 fib, for instance, stop loss below the low, and then aim for maybe the minus 61.8 target, for instance. Let's see, with the 38.2 fib, we're looking at about a 1.3 to 1. Or we can trail stop. We can trail stop the candle lows or the fractals, or split the trade. So this was a good breakout to the upside. Now, if we go lower than a 4-hour chart, that is really not any more higher time frames. 4-hour chart is still okay. So that's about it from gold from this perspective, but we can still analyze it a bit, just to give more context about what's going on. And let's take a look at this hourly chart. I wouldn't be surprised if price is in a wave 5, from my perspective, and if it can make, I would say, one more higher high to 112.50, that could complete 5 waves. 1, 2, 3, 4, 5. The wave 4 is still valid if price goes to the 38 or 50 fib, but if it breaks below the 61.8, then that's invalidated. And if it completes the 5 wave at 112.50, this could complete a wave 1 or A. We could see a 3-wave down for wave 2 or B, and that could be interesting for a wave 3 or C. And that particular long could be very interesting. In that case, I would redraw the fib from this bottom to the top. Let's say it's 112.50, and I'll be specifically looking for 50, 61, or 78.6 fib. So I'm not sure which candle close you're looking at, Angel, but I do think there's a 50 fib possible there. This is a pretty good momentum, so price does not have to get to the 38.2 fib. Considering the target is at 12.50, at least from my perspective, that's about $8. So if we want a 1-to-1, at least a 1-to-1, I guess the stop loss would have to be below this bottom. Let's take a look at the 50-minute chart. This downside retracement is not that pleasant, and that would make it less tempting to trade from my perspective. I think that this could be still a correction. This looks like an ABC correction, which means that price might make it dip back down to the 38 or this bottom before moving up. Angel's looking at the daily charts. From a daily perspective, I would be inclined to wait. I personally see, that's my view, of course, and everyone will have their own view, but I personally would wait for price to finish this small move up, and I would rather wait for a retracement and then look here. But sometimes I'm overly precise, so the price doesn't have to follow this exact plan, of course. So Dushan is saying 30 degrees. Yes, that is hot for a walk indeed, but it's here 32, by the way, but we hope that, well, maybe I think we'll go a bit later, maybe not right after the webinar, but like 7 p.m. or something like that, 8. It should be better by then. So that's gold. We can take a look at some other charts. How about Aussie? I know that, Dushan, you had some great charts. No, that was the dollar Swiss you shared with me. Sorry. Okay, so we'll take a look at the Aussie first. Then we can take a look at dollar Swiss. And if you have any preference, let me know. So we talked about bounces at Admiral Keltner 2 weeks ago. Now looking for breakouts. So when looking at this daily chart, let me close this mini terminal for a second. When looking for breakouts, we had a breakout candle here, right here. Candle closed in the high. Okay, candle, not very big. And we can see that that was a good breakout continuation to the upside. So it's pretty simple. It's pretty straightforward. Candle closes, candle sizes, candlestick patterns at Keltner. And if there's, of course, more resistance confluence there, that's perfectly fine. We can use that to say that the breakout is perhaps even stronger, right? The stronger basically the stronger the candle going through a strong resistance, the more info that will give us. Also true is that counting the breakout number is good too. So if this is the second attempt rather than the first attempt, that helps. As you can see, we had a breakout candle here too that didn't go anywhere. Realize that the first attempt, typically we see a bounce. The second attempt is 50-50. The third attempt, a breakout, is more important. So if you see this approaching the first time a major trendline, Keltner, it is wise to look at other factors to see if it makes sense. You don't have to necessarily exclude it, but looking at the weekly and 4-hour charts to see is there some space for continuation upside makes sense. All right, so here are some examples of the past. Weekly chart had that too. And you can see 4-hour chart, once it starts breaking above the Keltner, there's a good chance that it can ride above that Keltner. That's why I like the Keltner, compared to Bollinger Band. What's the chance of 1180? Well, not so good, I think, at this moment, by the way, because I think that there is a good chance that this has finished the correction. I would be more inclined to look for a bounce at 1222. Weekly pivot point, 61.8 fib. I think that there's going to be a three-way move up at the least back to resistance here, rather than a break below this support level. Now, Keltner is just an example, but with higher time frames, we can of course use other resistance levels too. Trend lines, not only higher time frames, all time frames, but we can use trend lines, fractals, weekly pivot points to use bounce and break spots too. Doesn't have to be Keltner. It's just an example. We can combine them. So by using these three factors, right? One, supportive resistance, confluence, understanding the zones. Two, the candles, understanding if there's a strong breakout candle or not. And three, the number of breakout attempts. Then we'll understand whether a bounce or break is more likely, whether a bounce or break is more desired, and how we're going to trade it. You can always zoom in or out to get a bit more information about the market structure, what's going on, to see if it's desirable to trade. If you're looking at the daily, you can look at the weekly. Are there key levels that are close that we didn't see on the daily? But using these three factors, we can understand pretty straightforward whether prices, you can always add a few tools to see if a breakout is indeed likely or not. But it's pretty straightforward in the sense that we can analyze what's going on. Supportive resistance, the strength of that supportive resistance, looking at confluence, how price responds to that with the number of candles, and what breakout attempt is it. We can do that with trend lines too. Same thing, as I said before. Let's take a look at if we can find some example in the past. Let me. All right. Now a trend line like this, I don't think is that great, although of course price did make a retracement. I'm more looking for it's a reversal breakout. It's something to consider, but be aware that you might need a bit more, experience with that. Um, this one is a bit better, and that has to do with the angle of the trend line. The reason that this one is a bit dangerous is because of the steepness of that trend line. Do you see the angle? It's very steep, so there's a lot of momentum. Here, the angle is better, and it's more it's shallower. So a breakout above this trend line is better. So that's a trend line break. It's a break above this top two, above fractals. Good breakout candle right here. That could have been an entry too, for instance. So you can use this on daily charts. It's especially good on daily charts, I would say, for hour charts. I mean, obviously you can trade this on the hourly 50-minute chart too, but the thing is, at that time, in these time frames, we need to make more analysis and use more tools to see, because to see where the good trades are, because the chart is just choppier and is not as fluent, maybe in a way, in a certain degree. There's going to be more noise. There's also sometimes noise on high time frames. Don't get me wrong, but on the lower time frames, on 50-minute charts, there's just a lot of candles that don't necessarily push in any direction. All right, so good breakout candle too. So waiting, having patience. I know it's might seem very tough and might seem boring maybe, or slow, or there are a lot of people, a lot of traders that want setups right away and are looking for signals or are looking for stuff to happen now, right? Don't have maybe the patience as much to analyze the charts, kind of set up the trading plan and wait for those setups to come to um, their kind of edge. So I think though the fact that you are in this webinar is already a great step, because I think that by looking at the charts this way, in my view, I think that it helps you gain a long-term edge perspective that goes beyond one trade. It allows you to analyze the charts and know what's going on, and understand what's going on and be able to read the charts with clarity. If you don't do that, the market environment changes, the system that used to work well breaks down for whatever reason, but you don't know why. So this is a more sustainable method of by understanding not just looking at the superficial kind of top layer of the chart, but understanding the full kind of structure of it. If you see what I mean. I hope I'm not losing you here, but that's why basically I think it's important to analyze the market and look at the market structure. These concepts fit very well within that. We can take a look at the dollar Swissy, because I promised Dushan to take Dushan. I hope I said it correctly. He sent charts, which is great. I love that, and I hope more of you will follow. And this is the dollar Swissy once again, Swiss franc. I haven't looked at the dollar Swissy in a webinar for eons. I think, well, that's how it feels like, at least. But yeah, so it's time to take a look, and this is a perfect timing, right? I haven't been a fan because of the interventions and the Swiss is choppy and stuff like that. But let's take a look. So this was the chart sent, and I love to take a look at other charts because it gives me a perspective of how you look at the charts. I like to see how you draw the lines, or if you add something, what indicators you look at. Just call me a technical analysis kind of fan or something like that, right? So I just love looking at these charts. So I hope that more of you will join and follow suit. So we got a downside break, a support line that has been broken with this candle, now turned into resistance. We see these are alligator moving averages opening, widening, right? Showing that there's momentum to the downside. And the oscillator 2 showing momentum to the downside. So let's take a look at the daily chart now. We see a channel. The weekly support line is broken. We see a trend channel and a channel within the channel at the bottom of the channel. So we see a channel within the bigger channel, but that's at the bottom of that bigger channel. And then on a 4-hour chart, Dushan is asking whether there could be kind of an end here. He terms it A, B, C, D, E. It's not the triangle, by the way. If you meant, if you use these letters because you think it's a triangle, that's not the case because we don't have lower highs and higher lows. From a wave perspective, we wouldn't therefore use these letters, but doesn't matter. I understand that the goal that you were using that's to indicate that whether this could be a bouncing spot. So interesting idea, interesting perspective. Let's take a look at my charts now, and we'll take a look at that. There we go, dollar Swissy. Let me apply my template. And yeah, Dushan is saying that boring trading is consistent trading, and there's very big value in that, in fact. Definitely not something that we should underestimate. When you get to that level, sure, things are exciting. Sure, looking at new things are exciting. But it's really that, looking at the boring old stuff and applying that over and over again, that's really where we get more mileage, in fact. So, all right, so long time ago. Good old dollar Swissy was great for the downtrend here. Anyone trading previous decade, basically, knows about this trend. That was great. But the dollar Swissy has not been that interesting ever since. Really, since this, this was a tremendous acceleration that was bound to pop back. That was still good. The upside trade was just, that was just went so quickly. That was a huge momentum. Ever since, it's not been that great. Very, very slow movement here. All right, let's take a look at this trend line that has been broken. I think that's the one Dushan has indeed. Price pierced through the Keltner, but not riding below it as yet. And we should also note the horizontal support on the left. For the moment. All right. Daily chart. Is technically not showing divergence, although it's very, very close. Let's put a fib from here to here. And we can see a 61.8 bounce. Pretty neat bounce. Price has hit the minus 61.8 target and the minus 272 target. Small reaction at the first target, bigger reaction at the second target. But now price is breaking through that target. All right, so this could be a retest of the same target. I'm not saying it's necessarily a full-fledged breakout as yet. I think that's a bit too soon. But if price goes below 95, I think there's a good chance it will go to 94, 93.70, right? That there could be a continuation of that. 4-hour chart. Definitely divergence between the bottoms. Kind of getting a bit choppy at this moment. So is this a bouncing spot? 1, 2, 3, 4, 5 candles. Not breaking this low. If this is a bullish candle, this current 4-hour candle, might be so. One thing to note though, daily candle is very strong. So I'm not sure if 4-hour chart is that great to look at. It could be good to wait for a bullish candle on the daily chart. Hourly chart, this could easily be a wave 4. So we got to be aware of the 38.2 fib resistance and 50. Price could easily bounce there for one more downside. So I'll take a look at the 50-minute chart. Well, I think that there could be some reversal trade up to these fibs, but zone is pretty small, and I don't think it's that great. I do think that it's a bit of a tough spot because of the fact that it's pretty strong support, pretty good candle. So I would probably say this is the second attempt that a continuation lower seems a bit more likely still to me, unless I see daily candles that would prove it otherwise. So therefore, the upside here is probably limited to just a few pips before we get a retracement, and there could be resistance, and price might start back to go down again like that. For the moment, that does seem the most likely, I think. But if price does break above the 50 fib, then that could change it. And if we see daily candles that are bullish, that could change it. It is a pretty big target, minus 61.8, and it could hold it. So yesterday we talked about, let's see, not trading it here because of the potential zigzag. Now that basically didn't go. That zigzag didn't go anywhere. We had basically upside, then downside, and a bear flag. But we are still having that divergence we talked about yesterday, and there were multiple divergences with multiple time frames. So yeah, dollar might get a bit of a relief to this 129 zone we were talking about, and that is possible. But first, the weekly pivot point. But the thing is, especially with trends, is that yeah, they can last long, and they can still keep pushing. So that was a bit nasty with trends, and in the sense that when you trade against them, I mean. All right. Any? So that was the dollar Swiss. Great stuff. Interesting to look at it again. Anyone else have any particular currency pair in mind? Let's take a look at our majors again. In the meantime, we not looking that great as yet. Let's see how this hour and next hour behave. I would like to see some engulfing twins here, but I'm a bit scared that the fundamentals are kind of like trumping this technical analysis at the moment. Also, the pound is still struggling. If this ends up bearish, I might even consider moving to break even. If this is bearish. Or if I see two bearish candles like this, or three, I'm not sure how patient I will be with that, by the way. Because in that case, there would be a confirmed hit here, which is really more looking like a triangle. Pound yen. Pound yen, we talked about that yesterday too, indeed, and we said maybe a zigzag back up because of the bigger support level close by. And it didn't do that. It failed to break above this high, so we didn't get any continuation there. And kind of a triple double top formation, and still made one more downside. I still think that price is at support, so it could just still use the same level as a bouncing spot. Golfing twins on the hourly chart, so it could still be a bouncing spot. Pound is all in all still in a bullish formation, I would say, when looking at the 4-hour chart. That could lift the pound upside. Dollar yen is bearish, but so far not very impulsively, and is bouncing up at the moment. So might be tradable to the upside here. I'm not a big fan of it still, because it's rough. It's pretty tightly squeezed between big resistance and support, but mostly close to resistance. This one. So it's okay, but it's not the best one, I think, in my view. But definitely something to consider. I think maybe looking at this 4-hour candle, if it's bullish, could be an option. All right, folks. Well, I think that that's it for today. I guess you can on the demo account you can check out cryptocurrencies, by the way, which 4 of them: Bitcoin, Litecoin, Ethereum, if I say it correctly, and Ripple. Plus, of course, all the commodities, CFDs, and forex pairs. So something to think about. You can find that here. More info. About, I'm not sure if they're mentioned here, but anyhow, if you download it, you'll find it. You just have to make sure that all instruments are visible. That's the wrong one here. There we go. Just right click in the symbol list and click on show all. We can take a quick look, by the way. There we go. Volatile movement because price made a pretty strong dip last week from 23 all the way to 18, below 18, then back up to 23. So it's a V-Valley bounce, boom, boom, right? The day 4-hour chart, you see that very good. Boom, boom, right? Definitely V-Valley. That is pretty bullish at this moment. So from my perspective, I think if there's some bull flag correction like this, there could be a break to the upside again. This trend line could cause it to stop, I think, make a bit of pause, then break out again. I don't know how far. We could go just to the R2 for the moment, between R1 and R2. That's a pretty big move, but retest these tops again. Of course, We don't know if it will break out. It could be, doesn't have to be a bull flag. It could be a more serious correction like this. So, but this is a potential bounce spot, I think, more than a break spot. But definitely good momentum. So we'll have to keep an eye on daily charts and 4-hour charts to see how price responds to this level. All right, folks. Wish you all great trading. Enjoy the evening, morning, or afternoon, wherever you are in the world, and make sure to take a look at the platform Meditative Force Supreme Edition. Just a lot of extra features there that I think you'll enjoy. And see you very soon. Cheers.